right, welcome back my way again today. Still the same concept from ICT, but this is majorly how I use my fair value gap, and I've told us what the fair value gap is. Fair value gap is between, three candles, and in this case, we have um this red candle that look like a pin bar, and then this large fat candle that whip down, and then this bullish candle that also look like an hammer or something sort of like that. So this space between the low of this candle and the high of this candle is what we call a fair value gap. It means there's an imbalance, just as ICT would define it. And then it says there are ways price reacts when price gets to those areas. Just calling our attention to it, just so we can find usefulness around it. Very, very important. So these are the monthly charts, which I said earlier that these are the things you want to be looking for on the monthly charts. You want to be checking for fair value gaps, old highs, old lows, inversion fair value gap, and things like that could help and stuff. So in this case, this is a fair value gap. I want to check how price, entered into it, and how this movement came about. This large fat movement. I want to see how it came about. So join me. Let's dive into lower time frames and see what we could glean from there. So this is NZD CHF, and then we go to the weekly time frame. So on the weekly time frame, this is what we've got. Now, as I've seen earlier, this is the monthly fair value gap. So we could also see some fair value gap here, some here also. These are imbalances, which price must come back to balance. So says ICT and its concept, and I've tried this in the marketplace over and over again for at least a year now, and then I've seen that these things actually they really make sense if you see them before it happens. So this on a weekly time frame. So this imbalance took so many weeks. So just in case you saw this imbalance, you would have to wait for weeks for this trade idea to actually come to fruition, as the case may be. So price traded up into the fair value gap. This is a weekly time frame, and on this weekly time frame, let me quickly draw attention to what ICT calls stop hunt. This is what it calls stop hunt. So, and it is more interesting that it is happening inside a larger fair value gap. These are things I would like to see. Now, the first thing is, the first thing I saw was what? A fair value gap. Just things that could help for a nice trade idea. The first is a fair value gap. The first thing that I saw on a monthly time frame was a fair value gap. Which was this quite interesting fair value gap. Let me number them so that at least it can give like a fair value gap. Now the second thing we are seeing here is stop hunt on weekly time frame. Stop hunt on the weekly time frame. stop on the weekly time frame. So fair value gap on the monthly time frame, which price needs to balance, and then on the weekly time frame, we are seeing a stop on. Very important. You want to keep notes like this and try to see how this thing works. So when ICT has once said that when price is going bullish, and when price is going bearish, it seeks buy side liquidity before going down to sell side liquidity. And that's what we're actually seeing here. We are seeing price taking out buy side liquidity inside the larger fair value gap. It makes sense. These are price signatures you would expect to see, so that when they happen, it will not be strange, so to say. So you want to consider that when you are looking at price action. So let's go down to daily time frame and then look at these things. Now, can we see on a daily time frame, this is the stop, this is the buy stops that I highlighted on the weekly time frame. And then we'll see that there was consolidation for days when price got to that area. There was consolidation for days here. You can see price was just going high, coming down, going high, coming down, such kind of movement, which it is quite expected, but you are not really moved by all these choppy movements. Highest you should do, if you cannot trade it, and of which you shouldn't even trade it, is just stay out of it and wait for price to get settled, give you a clear direction before you proceed to trigger your buy and your sell. Now, of course, price took out an order here, enter into it, and I feel that there are so many things that will be useful here. So let's dive in and still check on the 4-hour time frame. What can we see? What can we glean out from this 4-hour time frame here? Okay, this is the 4-hour time frame, and we can see the whole chopping around, the higher movement, the lower movement, and stuff like that. But one thing I want to draw your attention to that will also help you in this kind of trade idea is a matter of trend, and most importantly on the 4 hours time frame. After this last movement here, price entered into a fair value gap here. I'm trying to show us something here. Price entered into a fair value gap here, and then still went down lower again. Mind it, this is a what? This is a 4-hour chart. Now what can you see from here? This is a last lower high that price formed before coming to this point, and boom, price broke through this fair value gap here, one, and broke through this short-term high, and I'll view that as a break of market structure. I'll view that, and then I'll also point this out too as an inversion fair value gap. Once I see these two things happen in the marketplace, I really want to take them seriously. The formation of an inversion fair value gap, and also the break of a short-term low. A break of a short-term low. So all of which signifies a change in the state of delivery. To me, they signify that a change in state of delivery. So, and as such, we can see the price retraced into the inversion fair value gap. That's what the price actually did. You trace into the inversion fair value gap and begin the normal higher highs and higher lows of a bullish trend. So when this change of delivery happened here with this impulsive move, expectedly you see what, a retracement. And then the next one you see is price came and broke through this high here. Of course, after then, price retraced a little, took out this high again, retraced a little into this small little fair value gap here, and then went in, took out this high here, this external liquidity, and then here we are inside the larger fair value gap and even onto the midpoint. The midpoint, as ICT has said, it is the sensitive part of fair value gaps which you want to take note of, and you want to take note of how price reacts there. So from here we've been seeing higher highs and higher lows, higher highs and higher lows. So this higher low create higher high, another higher low here, it came, stopped here, broke through this high, but eventually what happened? Price came after taking out this liquidity here. I'm sure this is a new week. All this movement was a new week. So price took out this high here and then broke this last higher low. Can we see that? Price broke through this last higher low, which signifies the end of the bullish trend. Can you see that? So it's just like a pattern formation. Price came, broke through that place, and after an impulsive move, the next thing that you should be waiting for is a retracement. A retracement that happened here. So price retraced into this little fair value gap. Can you see how small it is? And that's how powerful it can be. So price entered into it, broke market, it just retraced into it. And we'll go on to 1 hour time frame to see a very important aspect of this, drawing our attention to, which I believe should give us a better feel of price, better profitability as we go on. So now let's go on to the 1 hour time frame. Here we have seen already that there is already a change in the state of delivery, and we've already seen a retracement. So, but this is 4 hours higher time frame. You should have deep pockets. You might not want to be taking trade this way, so you might want to go to 1 hour time frame to see if you could refine it so that you can limit, or let me say, do a better risk management, so to say. So 1 hour time frame. 1 hour time frame inside the fair value gap. Here is it. We could even see from our 1 hour chart that the price at this point was just consolidating. Money would have been lost from all of this here. But then at last we saw that this week was taken out by this numerous buy stops, was taken by this taken out by this price movement here, and then boom, this last higher low was broken, and then we could of course see a fair value gap, a 1 hour fair value gap. And then what can you see here? Price entered into it multiple times. It entered once, it entered twice, before eventually it begins to drive lower. Continues to what? Drive lower. You can see. Price continues to drive lower. So it is good that we are not trying to, how will I say it now, be against this movement. We don't want to be against this movement here. We want to be in line with it. So setting your position in this fair value gap here, and then putting your stop loss at the top here with proper risk management, this trade is worth taking. And it's very interesting. So as I used to say, you might not see this kind of movement every day on this particular pair, but you can look for several markets that you could check and then try to check higher time frame fair value gaps. Starting from monthly, checking weekly, also transposing the positions on lower time frames, and I'm sure you're going to do well with this. Hopefully I'll drop a value here. I want you to like it, subscribe. More is coming your way, more inciting, more information is coming your way. So see you next time.